establishes a balance of 80,000, and the 101 comes back here. So this posting reference, this PR, it's a cross-referencing system, so you can tell where it came from in the ledger, and you can tell it where it was posted to. It was supposed to account 101 in the journal. Let me do the next one. So the next one is office equipment. So office equipment is down here. So again, it's the date is A. J or GJ1 goes here. That's page 1 of the journal. It's a debit of 30,000. That establishes a balance of 30,000. And then I bring the 163 back here to show where I posted it to. Let me do the next one. C Cook Capital for a credit of 110. So here's C Cook Capital. So again, the date of this transaction is A. Again, it happened on GJ1 or J1 depending. And now it's a credit of 110,000 that establishes a balance of 110,000. And the 301 comes back here telling me where I posted it to. So this tells me where I posted it, where it came from, and where it went to. Now, I want to point out that what is this is a balance. So let me do one more. Let's go down to the next transaction. And let me post this credit to cash. So on B, again, we're still on General Journal, page 1. Now, there's a credit of 40,000, and the balance is reduced from 80 down to 40. And the 101 comes back here. So this running balance tells you how much, it just gives you the balance of the account in every transaction. So in this case, because it's cash, it will have a debit balance. That'll be the normal balance, right? So the first one established the balance. The next one, what you did is you spent $40,000. And so now you started with 80, you spent 40, now it's down to 40. Does that make sense? And what we're doing here is we're posting from the journal to the ledger. And so the journal is the book of original entry. You paired the debit with its corresponding credit with an explanation, and the explanation ties it back to a source document. But you got to summarize. So then you post from the journal to the ledger, and this starts to summarize. So now at this point in time, the cash account is normally the equivalent of some sort of a checking account, and you have $40,000 in your checking account at this point in time. Okay? Is everybody doing good? All right, why don't I turn you loose with that? I'll put this back. Well, you guys probably have this. Let me put up the, here's the second page, in case you were working there. And I'll put up the answers in the minutes for some feedback. You guys doing good? Any questions, comments? Ready to go? All right.
So, the land is 30 grand. So it's a bed, right? So the building.
What do you buy on yours?
Oh, okay.
No, all of my seats. My friend gave me some.
Okay.
But he gets all my stuff.
So when I bought it, it was like a 2 for $60, and I got back.
Well, you don't owe money for it. Because right now I'm taking it. So then, so it'd be 170,000 in the account. And then. So then notes payable.
Oh, wait, 400.
Oh, yeah. equipment.
106.
That's good. So what you're gonna do now is you're gonna push from the journal to the ledger. Oh, you guys got it. That's it. And the debit here is the debit here, credit here is credit there, and then here's the credit.
101.
Now down here, for instance, so the accounts payable, you don't have a debit.
But then,
So every time you have to credit it, you bear increases.
oh,
And then don't forget the normal balances will slightly increase. Okay.
and then
Okay.
under accounts payable, we have
And so, you know, you what the, so it's, I.
But we don't have to add that.
All right, thank you, and I'll try to get this number as soon as possible. So, but if you miss a class, you can still have class. Okay.
So right after this class, we'll
Oh, okay. Okay. All right.
The other part
I think that was like the other day we went to
Right, so if for some reason I'm not there, feel free to take a look at the YouTube video. And all it means is somebody else is going over the same topic. So the book says it one way, I say it one way, and somebody else says it another way. And between the three of us, perfect shine. Okay, sounds good. All right. Oh, sure.
So, what's 110?
You have to write it.
Did,
You think it's what is it?
Adding 50,000? Adding? Oh.
I'm just checking. Yeah. You have a question? I'm just checking.
And then you add it to the 32. Accounts payable.
wait there.
Jason, sorry, this is stable. Very good. Good. So, you guys doing well? You could, you could, any way that works best for you. And it can't, you can do it. Just do it.
18,000. Yeah.
So then,
And then be sure to bring back the copy of your where you posted it to.
Yeah. So credit.
Because this is, now there's page one, there's the second page.
well, it's
So at some point in
40,000
time,
minus 50.
then you have page two.
Oh, I put it on the description.
Well, it's a lot of numbers. It's office equipment.
Wait, which one is this? What letter?
Pretty.
The debit will add on to it.
Oh, no, no.
And by the way, it'll also be on the video.
Yeah.
Fees earned. Put it in.
So,
Credited. Utilities expense.
Oh, and it's weekly for the
is there any of these that should be negative? No, because of the way it's
46.
Wait, that would be mine. Wait,
Okay.
See, we didn't know.
Yeah. And salary 6.
44,500 minus 800 would be 43,700. That much, that would be right.
Cash, 101.
I just want to make sure.
Credit,
Which is a, I don't want to get my credit. No, the capital. Okay, so accounts payable.
So we minus the.
Something less subtract. There,
Okay.
you have balance. And then when you have two,
Cash,
so
101.
subtract it from there, right?
6,000.
Balance it there.
And fees are for it's 6,000. Oh, this is.
Guess.
So then,
So we minus the. Okay.
Okay, then we should have
Yep.
been. Yeah, so
Cash and 101.
really, so.
This is each.
Yeah, I'll wait, no.
I,
Okay.
okay.
I don't know where we read. That's 6,000. So it should be.
Oh.
Negative 100. So this is negative 6,000.
debit.
Yeah.
Because
So if it's an asset, then debit has option.
so that is right there. So J, office equipment.
But it's here, credits with debit.
Oh, that works fine.
So am I doing? 6,000. So I did 6,000 plus the 2,400.
So that's right.
This one is, this one is, this.
So for debit, so then it'd be 2,400 minus. How is that?
It's on the wrong side. Yeah. Oh, we have 13 on demo here.
Well, so then 20,000. Why did they make it better?
I would say when you get dates, I completely agree with you. Yeah. And-
But it
yeah.
transfers over, right?
Yeah.
There's no spread.
Yeah, I agree.
Oh, that was an
And
A.
why didn't they make it date? Yeah, I agree. And by the way, the book, it's really good, because some books screw up consistently.
So what is one we did, and what credit?
So, and I agree with you, on this one, I think the date would have been better.
I know, it just takes
But you
one
never
mess
know,
up.
maybe they said, listen, let's not question the date, because it's kind of confusing, we'll get that later. I don't know, I have no idea what they did.
Oh, that's why accounts receivable.
I would wait. Now I know.
Oh, that.
That's what I'm doing.
Yeah.
Oh, I would draw.
correct.
So then
2,400 balance on office supplies.
your earning will be,
56,000.
so it would be the 52 plus the 6.
14,000 on automobile, 170,000 on building. 6,000 on accounts payable.
46 times
So accounts payable, we only had 24, we had 24 on that. The last one.
So then it'd be 3 grand. Right? Cash.
What's that cash rate? So balance is really cash now.
Cash, right?
His personal card.
withdrawal.
Oh.
You don't.
Balance sheet was 6,000 at the end.
You're wrong way.
Yes.
Yeah.
Notes payable 160. Quick capital.
We're doing down stuff.
Withdrawal 16.
Here's
11,200.
But then when you go, no wait, when you go to fees earned, it's credit, so you're like actually writing on fees earned.
Yeah, that's because we don't have a reference sheet. Trying to go back.
Is that right? Does you have that right?
You guys, some people are done. Let me do a couple things here. First of all, can I have your attention? Let me have your attention. Before we do anything. All right. So, just a couple things. If you miss a class, it'll be on tape. I'll put it up as soon as I can. Okay. Now, and of course, what it means is the fact that your primary source should be the textbook, but you've got 3 sources, so the textbook will say it one way, all cover the same material, saying it a different way, and there's a YouTube video on every major topic, right? So there's 3 that just says the same thing 3 different ways. Second of all, don't forget, now this is the Tuesday, Thursday class. Now, Monday and Tuesday, both classes meet here from 8 to the same time, and they'll cover about the same material. So if you guys know you're going to miss a Tuesday, feel free to take the previous Monday, okay? If you know you're going to miss Thursday, feel free to come the day before, okay? You're very welcome. And all we want to do is get you through this thing with a good grade so you go to your 4-year school and you shine, okay? That's it. All right. Now, by the way, we kind of worked over a little bit. Would you guys like to skip the break? If you need to take a stop, do it, and we'll just get out 10 minutes early? Does it sound like a plan? Or who, or? All right, sound good?
Yep.
All right, okay, we'll just skip the break, we'll just take the break at the end. Okay, all right, so that'll be that. Now, let me put up the, put this up so it's easier to
It
read.
is a cookie shop.
Get that up. So here is the ledger.
And then I have this.
Excuse me.
I was going to subtract it. So it's right.
Here's the ledger. Let's put it up here for some feedback. Why don't I give you a minute with that and see what questions you have. And actually, I'm going to put this here. No, I'll put it here. Okay. I'll be with you just 1 second, Scott. Let me just put this up in autofocus.
It's nice to have something.
What do you got?
I was just saying we get 2 more copies so we can copy this down, so I have something.
Sure.
Oh.
Copy of each.
Here, this way we'll have.
It's a nice reference sheet.
Sure. Okay. Sure.
Yeah, absolutely.
All right. All right, sure. All right.
Oh, that's right, did it.
Yeah, just have a little over.
Could you pronounce it, is it Evan-Ju? Oh, N-Ju, it'll take me a time or two. Okay, N-Ju, and it will take me a time or two. Wait, oh, okay, all right, okay, sure. Anybody else want one? Extra one? Okay. Hey, by the way, don't forget, you know when you come in this door, it catches, so you gotta yank it. Okay, because it's open, all right?
On the last one. You're off,
All right, are there any questions or comments on this? You guys doing good? Now, the next step, so what we did is we just completed the ledger, and then do give me your attention, I'll get started on this next phase. So what we did is we just did the ledger, right? Now, the next step is the trial balance. So let's do the trial balance. So what we're going to do is we're going to take the ending and all these accounts. So for cash, all right, so for cash, the ending balance is $17,200. Accounts receivable is $1,400. Supplies is $2,400. Office equipment is $56,000. So here's the first one. So there's a 3-line heading, who, what, and when. Cash has a debit balance of $17,200. So here's cash, $17,200. So for those of you finished with this, the trial balance is the next step.
Yep, the other just order.
would be in debit.
Yeah.
Yeah. Would be 24 debit. How much? 56.
Because if they were on, yeah.
What are we supposed to be like? That's once I do account table first.
That'd be right. The differences on this sheet would be your debt. Or should these two sheets add, should this add up to be even? It should.
Well, the total debit should be the total credit.
Okay.
No, but I hope I'm answering your question.
Yeah.
We have a net gain or a net loss, would it show up?
Oh, it won't, this won't show up here. Where that will show up is on the income statement.
Okay.
So what you do is you take the revenue and the expenses, and the trial balance is the easiest place to find them. And from here, then you start with your income statement. And then you do your statement of owner's equity next, and your balance sheet. And you can get every number right off of the trial balance, except for the beginning owner's equity and the statement of owner's equity. And for that one, you gotta go to the balance sheet. Every other number. You guys ready for some answers? Is everybody see?
Why?
Not quite, all right, give me yell.
Yeah.
Okay.
The first time I started doing
And outgo supplies, 20.
So what you carry?
Yeah, so add all together, make sure.
Yeah. And building,
That's what I got.
Yeah.
once.
So
Mhm.
salaries
So
are.
withdrawals, the salaries and utilities, and go to the salary.
Like strike them all right.
Oh, yeah, because the deal is, that don't forget withdrawals, I'm sorry, you said withdrawals, expenses, and, what was it?
6,000.
Yeah, well, sure, and if you want a reference here, it's so withdrawals, okay, so here's withdrawals, and now it's balance, all expenses.
Credit, 160.
So you're only on cash.
These should at the end add up to the same.
Oh, and if they don't,
Okay.
if they don't, you know there's an error, and now it's
For everything else, you just add it up.
And they have
All right, so you're just grabbing all credit.
And withdrawal.
Like right here, right?
Yeah, that. Yeah.
Okay.
all right. You guys, can I have your attention for a second? Well, here, let me put up, here's the, let's do this. Here's the trial balance. You know, why don't let me give you a minute with that. Then let's look at, then, I'll put this back up. I'll see if you have any questions. And if you're okay, we'll take the next step. You guys okay? Are there any questions?
I don't think so.
All right. Can you guys give me your attention? And let's take this the next step. Excuse me here. All right. So let me move this over here. Let me go ahead and put this here. I'll turn on the light. So the next step then is to do the financial statements. So we just did the trial balance, and it balances, the debits equal the credits. So now the next step is to do the financial statements. What's the first financial statement we're going to do? Income statement, right? So here's the format. So there's a 3-line heading. Okay, who, what, and when. It'll be the name of the business, the name of the financial statement, and the date. Then you'll have revenue minus expense equals net income. Now, when you do this, so in this case, what we have here is there's one revenue account, it's fees earned, and there are 2 expense accounts, salaries and utilities. Now, when you do the financial statement, when do you use one line? When you either add or subtract. Where's the double line go? At the bottom, okay? At the top of each column, there's a dollar sign. Everything's clearly labeled. All right, so why don't I turn you loose with that, and we'll put up the answer in a minute. who's working with this? See, I'll bring it over to your desk, it's easier to work with at your desk, okay?
The trial balance, the order of assets and liabilities is important.
I'm sorry, what?
The order is very important.
Yeah, it is. It'll be the same order as the chart of accounts. And so the way this works is, assets are first, and if they're current assets, they're listed in order of equity. We'll get into this later. Liabilities are second, order is equity, revenue, expense.
And the order of each of them.
Now, in this case, the only order that's really important is, well, is current assets. Those are the used up within a year. There is I think the missing link will be a good answer to your question, but we'll get into the details later. Give me a challenge. All right.
Total that we got in cash, okay? Is there another step for it?
Oh, okay. Oh, yeah, all three of these, that's right. Yeah.
What? Oh, the balance. Oh.
So I would start
Yeah.
Let me put it up. Here's just kind of a rough graph. I'll turn off the light in a second so that's more readable. Because it's just, it's a rough graph. And so, I think that show up the drawing, does it? All right.
They say the pencil does not show up under those very well.
Yeah, and I just put this, I just kind of tossed this thing together to take it the next step. All right, so it's an income statement, I'll wait till out of focus. It's an income statement, revenues at the top, and it's fees earned, okay, for 11,200. And here's where you got that, off of the, okay. Then you have expenses, and there's two of them. There's salaries expense for 3,000, and this is where it came from. Utilities expense for 800, this is where it came from. And you do one line because you're going to add them together to give the 3,800. You do one line because you're going to subtract them. And then the bottom line gets a double line. That sound pretty good? I'll leave that up there to see what questions there are. You guys are okay with that? We'll take it, we'll go to the next one. You guys, can I have your attention for a second? Let's go into the next, so what's the second financial statement we're going to do? Statement of owner's equity, right? Now, here's the format. So this, this is the income statement, I'll put it right here. So we're going to do the statement of owner's equity. So what you do is you start out with the beginning capital. Okay? Then you add the increases, subtract the decreases, and that will give you the ending capital. So you can call it the beginning and the ending, or you can say the capital as of the date, the beginning of the accounting period. What two things will increase owner's equity? Or an investment and a net income. Okay, and now, in this, okay, and then what two things will decrease it? Withdrawal and a net loss. So, in this case, the beginning capital will be 0. It's kind of unusual circumstances because it's a brand new business, right? Now, there are two investments. Yeah, in this case, what am I, here it is, C Cook. So there were two investments. There was the cash in the car, wasn't it?
Yeah.
All right. Well, that's office equipment, right? So there was the beginning one where it was office equipment and cash for 110, and then it was automobile for 18, for a total of 128. So the investments will be 128. The net income comes off of the income statement, and that was 7,400. Add up the total increases, and so this would be what, 135,400. Okay, and I've drawn one line because I'm adding together. It's a subtotal. Now the withdrawal, let's take a look at that. The withdrawal, we can get it right, we get it right here. So the withdrawal was 6,400. So then that will be the decrease, 6,400. And if there's a net income, there won't be a net loss, so it'll be one or the other, right? So then, when you, I'll draw one line because I'm going to subtract it. When you do that, then the ending capital is now 129,000. And a double line because it's the bottom line, and that's the ending capital. Okay, does that make sense? Okay. Now, the beginning capital for the following month will be 129,000 because the ending capital for 1 month at midnight becomes the beginning capital for the following month. Okay? And this is unusual. It's a brand new business, that's why you have the 0. Okay? You doing okay with that? All right. What's the next one we're going to do? The balance sheet. In the balance sheet, you put your assets on one side, and you put your liability and owner's equity on the other. And it's like the fundamental accounting equation where assets equals liabilities plus owner's equity. Sound good? Good. All right. Why don't I turn you loose with that? And I'll put up the answers in a minute.
So it's pretty much like what we put here. So all these to here. These to here. Those are all.
What another one do down here?
So if you use assets. This right here. So this one and this one. Liabilities. And then this one. You won't put that.
Yeah.
So when you add them together, this is your
plus liability.
So assets, liability.
So it was
You look for the,
Just, just like,
Okay, sure.
make sure I have it correct. Sure.
You have to use the sheet, so you have to use the owner's equity, so you use the state owner's equity. So that
who was that quarterly measure to read?
because this is the new.
I'm so confused. So ours doesn't, so that ours equity isn't really good like us.
But use that to David voted
So in the balance sheet, are you just gonna write what the ending capital is?
Exactly.
Okay.
That's
So
exactly
you write
right.
it as ending capital, or you write it as owner's equity?
Well, actually, there's a couple ways you can do it. You can have capital with the ending date, whatever this is. Capital as of capital June 30th, 2011. You can call it ending capital, and of course then it will have the month at the top. Or,
Or 17 too.
you just, and again, as long as it's clearly labeled. But Kirsten, I hope I answered your question. I
Yeah.
kind of got off the subject here.
But I just wanna make sure that,
And in this case, we use the actual name.
yeah, so you write.
Yeah, that's true. It is, this is so true.
Oh, I see. So you
I'm
just
saying you can do cash all at once.
Yeah.
subtract both expenses.
Yeah.
Okay.
Just because I didn't subtract the.
You guys, let me turn on the lights, and I'll put that, put it on the board. So here's the balance sheet. Make it as large as possible. Again, it's in pencil. So what you did is you listed the assets on one side, okay? So you got cash, accounts receivable, office supplies, office equipment, automobile, building, land, and the total is $295. And over here you got the liabilities. There was accounts payable and notes payable. They total $166, and of course the single line bench you added. Capital. Now this capital came from the statement of owner's equity, so it's 100. Here's where we got it, right? Okay. Then you add the ending capital to the liabilities. You end up with the total liabilities plus owner's equity, and the two have to equal. Yeah.
So you don't include like the
So the one way to
expenses
get-
or anything like that under the owner's equity?
That's the beauty of it. Here, let me show you. When you do them in this order, then revenue and expenses only show up on the income statement. And you don't have to write it ever again. So then you take the net income, you carry it forward to the statement of owner's equity, and you never have to write withdrawal, beginning, ending, and all that. Then you take this 129, carry it to the balance sheet, and you never, so you save yourself all kinds of work if you do them in these orders, in this order.
Oh, you still, okay.
All right. Looks like you guys are at a good stopping place, so let me kind of point some things out here. Now, I'm going to turn on the light so it's easiest to, well, here, I'll leave this out, actually. So don't forget, so when you take a look at this, and do give me your attention, I'll point out some things you'd like to know here. So notice a couple things. Now, first of all, to do all of your financial statements, you can copy the numbers right from the trial balance except for one number. And that one number is the beginning capital. And this, for instance, this this capital account here, this $128,000, you don't know whether it's the beginning, you don't know whether it contains an investment, etc. So what you got to do, that's the only number, and to get that number, you got to go to the ledger and take a look at it. In this case, it was 0 with 2 investments. There was no beginning balance, right? And that's the only number, you just can't copy it, because everything, so when you do the balance sheet, you can copy the assets, you do the income statement, you got the revenue and expenses, etc. And the other thing, and I mentioned this earlier, but while I have everybody's attention, let me point it out. When you do the financial statements in this order, you save yourself a lot of writing, because revenue and expenses only have to be written one time on the income statement. Then that is carried forward as a net income. Then you never have to repeat the investments or the withdrawals, etc., because they go to this one place, and then when you carry the 129 over as owner's equity, you don't have to repeat it. So if you do them in this order, it saves a lot of labor. Okay? All right, you guys doing good? Let's have a review at the end so we have everything in long-term memory. Let me start by turn this out. I'll turn this on. So what we did at the very beginning of class, see, let's do this way. Okay? So, again, what we did here now is we've gone through the accounting cycle. So the first thing you do is you have a business transaction. And of course, they gave you the business transactions in problem 2-5A. That produces a source document, which is a written proof that happened. Then what you do is you journalize. And when you journalize, it looks like this. Okay? And what you want to do on a journal is you want to pair your debits. You want to pair the debit to its corresponding credit. And you want to tie that into an explanation. That's the book of original entry. The explanations that you'll use in class are really superfluous, right? But on the job, what you want to do is you want to tie this into a source document. Refer to a receipt, a check, something. Okay? All right. Then what you do is you post from the journal to the ledger. Now the ledger, one way of picturing it is to have each account has its own page. Now in this case they put every account on a page just because that's how you got to do it to save paper. And what an account does is it keeps track of the running total, increases and decreases. So when you transfer, like this would be easier to work with. So what happens on this is the journal, page 1. So when you transfer, it goes to date. The posting reference is where it came from. In this case, you put GJ1 or J1, remaining is page 1 of the journal. It's a debit of 80,000, and that establishes the balance of 80,000. Let's go down here. So then on date B, you credit cash for 40. So here you credit cash for 40. The balance was 80, you spent 40, it's reduced to 40. Then you bring the 101 back to the journal, and it's a cross-reference system. You can tell where you posted to. Then